evening. Ira Epstein, and here we are with your weekly edition of your financial market update for this Sunday, the 19th of September, 2025. You know, I like to get these out before tonight because there was no big deals, but this is the last really nice day we're going to have in Chicago for about 5 days. I feel bad for the people. Right now, if you go to the Beyonce concert, which is Sunday night in Chicago, the last one, you go there right now at 60. It's going to be in the 40s by the time the concert's through tonight. And then we're going to be cold the next 5 days. It's been gorgeous up till now. You know, it's already late May. This is unusual for us, but it's here. So if you're coming to Chicago, be aware it's a little bit of cold weather. Now, let me give you some more information now. The Conference Board's going to come out with its leading lagging economic indicators at 9. The month before last month, it was down 0.7 from the month before that. So we'll see where you're at. Moody's, they cut the U.S. credit rating. It's why you saw the stock indices down. We'll be back there in a minute. President Trump and President Putin are scheduled to have a phone call tomorrow. At what point does Trump say he's had enough with Putin, and Putin's not only dragging his feet, using the time to just capture more land, as he's hoping to get through a soggy spring into the summer where his troops can capture even more. So, you know, the European Union is all over the president, the UK, and we'll see where it's at. If Putin doesn't do a good job of showing a good foot where the president buys into it tomorrow, what does he do is the question. And as you can see, he walked away from Hamas and Israel, and Israel's gone in now. There's another major ground offensive. He couldn't stop that war either. Actually, it's Hamas that couldn't stop the war. He warned Hamas if they didn't do it. Now it's switched to the gears that Hamas either puts down all its arms or Israel keeps going. And that's basically where you're at. I'm fearful that that's what's going to happen with Putin, that this continued attack is going to call the president's hand and he has to do something there. That's not even to talk about Iran. And one other note, I just heard that ex-President Biden has a severe case of prostate cancer. In other words, very advanced. My heart goes out. It truly does to that. Not what we want to see. And at his age, not the best diagnosis you could possibly get. So we'll see how it goes. Fingers crossed. All right. So when we take a look at the markets today, you're down because of, I think, Moody's. The metal's coming alive in part because of that. That should be friendly to gold because the market is saying, Moody's is recognizing, it's taken them forever, that nothing's going to be done to cut spending in the United States. The Trump gamble is that he can bring enough new business into America and tariff money so that it offsets the increase of spending that he's doing. Now, if you don't believe that, fine. I've just given you the basics of it, all right? Because when you start talking to me, you're going to take the SALT numbers up. When you're taking breaks in Social Security, even if it's for people making, let's assume 75, 100,000 and less, whatever the number turns out to be, you give back money on tips. Tips don't bother me as much because I don't think if you get a cash tip, in most cases, it's declared. I mean, that's the nature of the service industry business, unless it's put on a credit card. But how many people leave cash on the table? Do you think they're actually declaring that? I have my own doubts, and I think you should too. And the IRS knows that, so they always work out something that you work with. Bonds and notes, I think you focus right here. Do we get back over 5%? And if we do, how does the market respond? And that's what the market worry is right now in that, in my opinion. The dollar index dropping on this news, as it should, because none of this is really pretty for what the market is doing. Why you can get a higher rate on the 30-year, that's because things aren't good, not because we're rip-roaring economy. That's my take on it. All right. So when we look at the S&P, you can see how it's come back this past week. It was up 6%. When we take a look at the weekly area chart of closes, tonight on the weekly basis, you're backing off a little bit. Okay, that's to be expected for the week. Again, now we see how this market's going to all handle it. You can see where you're at this point in time. You've had a spike higher, you're backing off, But the pattern has been higher lows, higher highs on the swing line. Now, in terms of the 18-week average of closes, bigger supports down at the 57.60 level. That's quite a ways from here. You'd have to drop 100 and what is that? 170 points? That's a lot. So I'm not convinced you're going back there. I just don't know. And the momentum is up. You're over the 18-week average. You're nowhere near Bollinger Bands. The Bollinger Band and the 100-week average did their job in stymieing the decline. This has been a bear market rally. Let me give you the hardest thing on all the stock indices, the whole group. The markets bottomed the week, and this is a weekly chart, of April 11th. On many of them, the date was April 7th. And as you look at it, if you're trying to buy this rally, where would you put a stop other than taking a dart and throwing it at a board somewhere? I don't think that makes sense. So you need a better chart pattern on a weekly chart to manage risk. Momentum you can see. Risk management, and it goes that way in all of them, so I'm not going to repeat it tonight on everything. You're also overbought on a weekly chart. When we come to the Dow, not quite overbought, same pattern, fighting its battle at the 18-week. Was this a short covering rally that's not going to make these highs and the market's going to come back down? If you think that's off the table, I'm not in that camp. I'm in the camp, it's a real possibility unless you go up over those highs. And now that you've rallied up here, prove that you can get over them. Otherwise, I'd be ultra cautious. This could be a better time to be picking individual stocks than it is playing the indices on the upside. In the NASDAQ, you rallied right into the resistance point. First week over the 18-week average and overbought like the S&P. And in the Russell, you're right up to all the resistance. You've rallied up. And similar to the Dow, you're not in overbought territory. We then look at the DAX. Will it make its run to the Bollinger Band? It hasn't hit it yet. It'd be interesting. The market certainly has the upside momentum. It is overbought, but it wins by default against the U.S. market when this gets going overnight. In the 30-year bond, do we take out these lows and add yield? I don't see how you don't. First big test is 111.19. It's almost a point under this. I think you can see that. And that's the real test of the market. Are we oversold? Absolutely. Am I telling traders, hey, I'd go short for that? I am not. But there's nothing here that is bullish, with even now more selling probably coming in if you got up to the 115 level, which I don't see that doing right away. Not at all. In the 10-year note, no, a little different game. Wants to hang in at the 100-week average in the 18. Trend down, bias down. That's your resistance point, these two numbers together. It's the same identical thing in the dollar index. As it was rallying, where do you think it's going? I don't see a big rally that can happen. It did lose the bearish embedded reading on Friday. I'll just show you that. Lost it 2 Fridays ago, and you kept it lost. So it's fully out of the embedded reading, and it's oversold at this point and falling back. But I see a lot of resistance right there. And in the euro, you had lost the bullish embedded reading 2 weeks ago, and you haven't regained it. So in theory, this could fall back to the support here, and the dollar can rally to those averages. We'll see. I've got some doubts. Canadian dollar losing its bullish momentum. Not a place to be. A lot of resistance on rallies at the combination of 72.81 and the upper Bollinger Band at 72.97. I'd be very careful there. A market that I got friendly again just now is the Japanese yen. I like the support at 67.65, and I like that the 18-week average just got over the 100-week. I think the pros will be nibbling if it gets back down there into the long side. Bitcoin, to me, can still continue its move on a weekly chart to the upper band. That'd be towards the 111,000 area, my friends. Brent, WTI crude. The differential keeps narrowing in between the two, and the trend stays, to me, on the downside in these markets. I still see that as a problem on the weekly charts of both the WTI and the Brent. Gasoline got itself up and over the 18-week average, and it's staying there so far. I think the pros are looking at the 209 level as the support. I hate that if you bought it and you put a stop under the recent low, you'd have to be under the 195.82 level. Now, I want to remind you that we have our natural gas report up right now. It goes off our website tomorrow, the 20th. So please go to iraepstein.com. When you look at the website, top left, you're going to see that report is right there. You can always move your icons up over here. You'll see an icon for that to get in. If you're watching me on YouTube, you'll see up here a circle with an eye in it. Give that a click. That'll do it for you. I'm Ira. I'll catch up with you all first thing in the morning. Have a great evening.